Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, November 3rd, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. You'll notice right now the ES pushing on highs, big time finish and continuation throughout the day in the previous two sessions, especially since the FOMC key level came out Wednesday. This morning we have the NFP report that has already come and gone, 150K versus a 180K expectation. So worse than expected there for NFP and a pop to the upside. Now this rally right here has been very, very bullish and aggressive, especially starting with the FOMC, leading into the FOMC on Wednesday. And it's a rally that's kind of gone higher very, very quickly in a downtrending market. So you have to wonder if this is something that will find an eventual trap and reverse back down. Something like this here that eventually fell back down. A push higher that eventually led back down. So we've seen quite a bit of that here recently, given the downtrending nature of this market. But even early in the year, various times we've seen these big squeezes only for them to come back down. So keeping an eye on the previous session's high. I know this is a big move away from that level already, but if there's a failure to hold the previous session's high, that could begin an early rejection that leads at least to a retest back to the FOMC key level below. So watching to see if we find signs of rejection here at these highs today. Overall, this market has remained very bullish in the very short term. And again, can this market continue to push higher? If so, 44.30 is going to be the next upside level here. That was the previous month's high price. Taking a look here at the NQ. Very similar price action. The NQ has rallied tremendously over the last couple of days. Really, the NQ lagged behind the ES and the YM strength yesterday, but during Wednesday's session had quite the reaction here after the FOMC. Was able to break through the top of that very narrow 4-day range and back above the previous quarter's low price with some juice. That's a pretty strong move right there. And again, shy of a major rejection here, a pullback could be an opportunity for bulls to defend and look to extend this to the previous month's high price. So can we get this thing back to 15.5 up ahead? The next pullback could provide that. Now keep an eye on the previous session's high price. Again, that's where an early sign of rejection could occur. That could lead to new lows on the day. Maybe we bounce back and become more digestive. We'll see. But the previous session's high will tell us a lot. A rejection and failure of prices there could easily give us previous session's mid. Maybe in the most bearish scenario, an outside day down briefly before price bounces back up. So again, not expecting a full-on failure here, but there could be the potential for an outside day down given the moderate range in the previous session. Taking a look here at crude oil, this one's up right now 1.3%. 1.3% at the moment. Big time move off the lows. This one finished the day in very bullish fashion in the previous session. This is a couple of days in a row where we've seen quite the back and forth from this day here initially being way up and then becoming an outside day down to this day yesterday doing very similar, up and then down hard, failed new low and then back up. This is a lot of back and forth here, and it's all happening at the 81.51 level. 81.51 again is the key range low here, so you have this level right there, 81.51 here as the low. And initially, we were seeing the rejection here. It didn't finish the day that way. Now we're seeing the rejection here today off that level, and you see price lifting. Again, to reject this level here would open up a return back to that price there. That's 88.27 in the very near term here. That's the midpoint of the key range. So if it can find some legs here, we could see some strength. And right now, in a downtrend, we are above the previous highs of the session. We're also above 3-day highs. This would be the spot that if a rejection was going to happen and the bears were going to take hold, this is where it would happen. It would happen here for a failed new high and then you'd look for another rotation down given the downtrend. So this is the spot here to keep an eye on. 83.50, maybe as high as 84. If bulls can start pushing through 84, it opens up the potential to 88.27. If you start to see a failure of these 3-day highs within the downtrend, that could open up a reversal back down. 81.50 could be retested up ahead. Keep an eye on this zone in crude oil. Gold, right now gold is up on the day, up 0.8%, but still in the range. Every single day this week so far, we've seen a test of the previous month's close. Traded there, and today took it bid. Still inside the narrow range here. And again, after this big time move to the upside, which followed a big time move to the downside, the expectation was we would likely get a period here of range bound action. Now, we had been stuck at the middle of this range, 1990, for a while, and the lower edge is 1960, the upper edge is 2020. You don't stay stuck at this middle portion forever. The idea was we're either going to get a test up or down to the edge, which could then lead to a fade back into the range here. So again, not anticipating a full-on breakout and continuation, but we could see a new high here in gold where we come up here, test prices above 2020, and then perhaps fade back down, maybe as deep as 1960, and then fade back up as this 60-point range continues to mature. All right, taking a look lastly here at the YM. The YM had a massive day in the previous session. Huge breakout back through the 33,500 level, rallied back up. Now, one thing that was pretty impressive about this is how fast it went that 1,000 points. We talked about the 32,800 level here and how significantly it was rejected Friday and Monday, and how that 32.8 could lead to a 33.8 move back above into year-to-date VWAP and VPOC and all these other metrics here. But to do it so quickly by the end of the day on Thursday, that was tremendous. This is a Monday low now at 32.5, and here on a Friday we've already gone to 34K plus. That is one massive trending week here to the upside. And the last couple of weeks were inverted checkmark weeks. This is one massive week that takes us all the way back up. This is a huge move right now. But is it too strong? Is it too far, too fast? Is it a bear market rally, which can be the fiercest types of rallies? And if so, then the next pullback, or this pullback, could be a selling opportunity. But where? The next level up is about 34,300. That's the previous month's high price right here. That's also a breakdown point where it failed before. Do we get up into this zone and then fall back down? How does that play out? So this edge right here is going to be very important. Even from a short-term intraday perspective, though, keep an eye on the previous session's high. A failure there, and you're rotating back down the range. Right now, 34K could be an easy level to watch for early signs of failure back down into the range as we establish perhaps a trading range day today. If further strength is going to be seen, again, 34,300 could be the target up ahead, whether it's by the end of the day or into the next week. But right now, after such a high range day, the expectation is for more of a range bound day. Maybe 33,750 up to current prices, 34,100, somewhere in that zone, and you have yourself a little range here that could be in play the rest of the day. All right, that is it for now. We'll see how this develops heading into the weekend. Good luck, trade well. Happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.